Now, for any company, it is compulsory to prepare certain financial statement at the end of the year as a part of its annual report, which include balance sheet, income statement, cash flow statement, and changes and statement of changes in capital. Now, cash flow statement is a specific statement which will give you idea regarding cash inflow and cash outflow. What cash you have received, what cash you have paid during the year. In India, there is specific accounting standard 3 issued by Institute of Chartered Accountant of India, which guides you how to prepare cash flow statement. So according to that, activity of any business from the perspective of cash flow can be divided into three parts: operating activity, investing activity, and financing activity. Now see. Expense, incomes. Fixed assets, current assets. Then so this your expense, your income, current assets, current liabilities. These are part of your regular business activity. So cash flow from operating activity or cash flow from operation. Then purchase and sell of investment. Purchase and sell of non-current asset or cash flow from investing activity. And issue of share, issue of debenture, redemption of debenture, issue of preference share, bank loan, all these are part of cash flow from financing activity. ક્લિયર? એટલા માટે મેં ત્રણ અલગ અલગ કલર લીધા. જો કોઈ ઓપ્શન કલર ના મળશે નહીં કસાયમાં, સમજી લેજો. ઓકે. Now here cash means cash on hand, bank balance. Cash equivalent means highly liquid short-term investment. Such investment which you can easily sell and convert it into cash. The investment in which risk of change in its price is very rare, like government security. What I explained to you. Operating activity, financing activity. Now, cash flow from operating activity for any firm which is engaged in non-financing business. Financing business and non-financing business. Finance company or financing business means banking business. Business of lending and borrowing money. So except that, cash flow from operating activity means income or receipt from sale of goods or services, income or receipts from commission, any other income which is not arise from investing, collection from debtors, collection from receivable, payment to creditors, payment to bills payable, payment for purchase, salary, wages paid to employee, sales and distribution expense, receipt of income tax refund, payment of tax. All these are part of operating activity. તમારે ફાઇનાન્સ કંપનીની નોન ફાઇનાન્સ કંપનીનું ધ્યાન રાખવાનું. બટ ફોર ફાઇનાન્સ કંપની cash flow from operating activity means purchase of security, interest paid on deposit, sale of security, interest received on security, interest on loan, salary paid, bonus paid, wages paid to employee, receipt of income tax, payment of income tax. This is for finance company. Now, cash flow from investing activities. So cash inflow and cash outflow. Whenever you are selling non-current asset, tangible, intangible means fixed asset, fixed tangible asset, fixed intangible asset, long-term investment, long-term lending. So whenever you are receiving any cash, any money from sale proceed of it, it is called cash inflow. And whenever you are purchasing any non-current asset, fixed asset, tangible asset, intangible asset, long-term investment, it is cash flow, cash outflow from investing activities. Then financing activity. Activity related to raise of finance, refund of money. So issue of equity, issue of preference share, issue of debenture, procurement of loan, creation of long-term liability, increase in bank overdraft. This is cash inflow from financing activity. And buyback of equity share, redemption of preference share, redemption of debenture, redemption of any other non-current liability, dividend paid on preference share capital, equity share capital, interest paid on debt, interest paid on debenture, interest paid on loan, reduction or refund or repayment of bank overdraft. All these are cash outflow from financing activity. Now, this is the cash flow statement. In your syllabus, there is only indirect method. Basically, there are two methods, direct and indirect. But in your syllabus, there is only indirect method. અને તમારે especially ગુજરાત બોર્ડમાં આખો cash flow statement નહીં પૂછાય. કોઈ એક જ પૂછાશે. ઓપરેટિંગ એક્ટિવિટી, ફાઇનાન્સિંગ એક્ટિવિટી, ઇન્વેસ્ટિંગ એક્ટિવિટી. સેન્ટ્રલ બોર્ડમાં બધું આખું સ્ટેટમેન્ટ. So first A, cash flow from operating activity. So net profit for the current year less non-operating income which we have credited to profit and loss account but which are not routine big income, which is not part of our regular business income, like profit on sale of investment, profit on sale of asset, interest received on investment, dividend received on investment, rent on fixed income. All these will be subtracted. Then non-cash transaction, provision and financial expense. These are the expenses which are of non-cash transaction, which you don't have to pay in cash. Depreciation written off, intangible asset amortized, fictitious asset written off, loss on sale of asset, taxes and provision, transfer to general reserve, proposed dividend. Proposed dividend means dividend which is declared but not paid. Basically, company at the end of the year will propose the dividend for the last year. Barabar? Which will be paid in the next year. So current year નું જે proposed dividend હોય that will be added, and the last year નું જે proposed dividend which is paid will be subtracted in cash flow from financing activity. Then financing expense, dividend paid, interest paid. So this is called operating profit before working capital changes. Then add or less, decrease in current asset and increase in current liability will be added. Say current asset में suppose आपने stock लइए. If opening stock is 50,000 and closing stock is 80,000, that means during the year we have purchased stock worth rupees 30,000. So whenever you are purchasing stock, it will reduce cash. So increase in current asset will be subtracted, but decrease in current asset. Suppose opening stock 50 or closing stock 30 or means during the year you have sold stock worth rupees 20,000. So you will receive cash. So whenever there is decrease in current asset, it will be added. Whenever there is increase in current asset, it will be subtracted. For current liability, reverse is the case. Increase in current liability subtracted, decrease in current increase in current liability added, decrease in current liability will be subtracted. Then tax paid for the previous year, that will be subtracted. So this will give you cash flow from operation. Then B, cash flow from investing activity. Sale of assets, sale of non-current investment, interest and dividend received, rent received, purchase of asset, purchase of non-current investment. So the purchase होय ये minus થાય, sale होय plus થાય. That will give you net cash flow from investing activity. Then cash flow from financing activity. Issue of share, issue of debenture, proceeds from long-term borrowing, long-term loan, short-term borrowing. Increase in bank overdraft will be added, decrease in bank overdraft cash can be subtracted, payment of dividend, payment of final dividend, and at the end of the year the dividend declared that. Interim dividend, sometime when company earns extra amount of profit, enormous amount of profit over and above the proposed or final dividend, company will declare dividend between the year, that is called interim dividend. So that will be also subtracted. Then repayment of loan, redemption of share, redemption of debenture, interest paid on debenture, interest paid on loan, that all will be subtracted. That is called net cash flow from investing activity. So you have to add A plus B plus C, that is cash flow from operating activity, cash flow from financing activity and cash flow from investing activity. So that will give you plus આવે તો net increase in cash or cash equivalent, minus આવે તો net decrease in cash and cash equivalent. Add opening balance of cash and cash equivalent. That is cash and cash equivalent in the beginning. So that will give you cash and cash equivalent at the end of the year. So this is the whole cash flow statement, which will give you information regarding cash received and cash paid for different activity during the year. Illustration 5. From the following transaction of Khushbu Company Limited, calculate cash flow from operating activity or cash flow from operation. So in this particular sum, there is no description of current asset or current liability. Okay, you can see there is no current asset, no current liability. Information is not given. So net profit for the year, also known as profit before tax, less non-operating incomes. Add non-cash expense, appropriations and provision. So that will give you operating profit before working capital changes. Then decrease in current asset, increase in current liability will be added. And increase in current asset, decrease in current liability will be subtracted. That will give you cash flow from operating activity. Let's see. Profit before tax. 1,32,000. Goodwill written off. Then patents amortized. depreciation written off. Transfer to general reserve. And interest received, non-operating income. Then dividend received. Then interest paid, dividend paid. Profit on sale of investment. Loss on sale of furniture. So total of these three items, 12,000, 3,000, 9,000 and 13,000. It is 34,000 will be subtracted, and total of this 7 items which are non-cash expense, appropriation and provision, that is 1,51,000. That is 2,49,000. Practically this is called operating profit before working capital changes, and after giving effect of current assets and current liability we will get operating cash flow or cash flow from operating activities. But in this sum there is no description regarding current asset and current liability, so profit before working capital will itself become cash flow from operating activities. It is also known as cash flow from operations. Clear?
Yes, sir.
Very good.
Profit before tax માંથી minus કરવું ને non operating income. Profit before tax માંથી minus કરવું.
Then see, તમને આ રીતનું આપ્યું હોય, profit and loss account, closing balance, opening balance, general reserve, taxation provision, depreciation, goodwill, debtors, creditor, bills payable. ના opening balance, closing balance આપે. Okay, then how cash flow from operating activities can be found out? So that is closing balance minus opening balance. So 2017 minus 2016, 89,000 minus 64,000. So 25,000. Then according to our format, non-operating income. Add decrease in current asset, increase in current liability, and less increase in current asset, decrease in current liability. हमारे एक पेज में जाएगी जैसे वांधो नहीं है हाँ सब see general reserve opening balance was 18,000 and closing balance is 34,000, means during the year you have transferred 16,000 difference to general reserve. So transfer to general reserve. Then provision for taxation. So opening balance 23,000 is called tax paid during the year. That is 23,000. And opening balance is called provision for taxation. That is 22,000. Then depreciation. In that also difference depreciation written off. During the year, how much depreciation you have provided? So that is 12,000. Then goodwill. During the year, goodwill written off. So opening balance was 19,000, and at the end of the year, that is 2017, it was 15,000. So 4,000 worth rupees goodwill you have written off during the current year. Then debtors, they are current asset. Opening balance of debtors was 18,000 and closing balance was 38,000. Means there is increase in debtors. Increase in current asset will be subtracted. Opening balance at the beginning it was 18,000. During the year it is 38,000 at the end. So during the year there is increase of debtor by 20,000. Then creditors. Opening balance 22,000, closing balance 45,000. So during the year there is increase in creditors. Then bills receivable. Decrease in bills receivable. Decrease in current asset will be added. From 12,000 to 8,000. Then bills payable. Decrease in current liability subtracted. Okay. Sixteen plus 22 plus 12 plus 4. 54,000 will be added to 25. So that will give you operating profit before working capital changes 79,000. Then 27,000 will be added to 79,000. So it will be 1,06,000. Then 26,000 will be subtracted from it. So it will be 80,000 minus 23,000.